All right, everybody, welcome back to HashrateUp. You are in for an absolute treat today. I'm speaking and sitting down with Brad Cuddy, Director of Energy Operations at Cholla Inc. It's not Cholla, guys. I talked to him because of a tweet he put out about their ASIC retirement home where they bought S19 J Pros for $30 a pop. That was sort of the prompt, and then we delved into that, the wider hash rate market, how he sees it, a bit about oil exploration and other things. Very enjoyable conversation. Thanks again, Brad, and I hope you guys enjoy it. Cheers. HashrateUp, hardware sales, advisory, hosting, and site brokerage. Find new and used ASIC deals through the website and the Telegram channel below. Make smarter decisions with HashrateUp. Like I said in the brief introduction, today I have the pleasure of sitting down with Mr. Brad Cuddy. Hello, Brad. How are you?
Good, Jesse. How are you?
I'm great. Thank you so much. For me, it's the evening. For you, I can see the sun is shining. You are Director of Energy Operations at Cholla Inc. Very important. It's not Cholla, guys. It's Cholla, like the paella. I hope we can maybe change the dynamic of that going forward. I had Gideon Powell on quite a while ago, boss man of your company. And maybe, Brad, where we can start before we head in sort of the main juicy riff topic of the tweet that you put out with the $30 S19 J Pros or S19 Pros. You'll have to remind me. Just briefly explain to people what Cholla Inc. does. I've heard Eric Hersman of Gridless talk about you guys like you guys were a mining lab. You know, I met Zach in Lusaka, who's on your team as well. So I feel like there's a lot going on. You just told me, mining is a small part of what we do. So I want to know what you guys do to pay the bills. So yeah, let's maybe start there.
Sure. So Cholla is a 3-generation-old oil and gas exploration company. Like you said, it's run by Gideon Powell right now, CEO. He's been a Bitcoiner since 2017. He built the first spec-built greenfield substation for Bitcoin mining in ERCOT back in 2018. Sold that deal to a big off-taker. So he's been in the space for a while, but our bread and butter has been oil and gas exploration. The company is privately owned, produces a couple thousand barrels of oil a day. But ideologically, we are Bitcoiners, wanting to see the Bitcoin succeed, Bitcoin mining succeed here in Texas, and it proliferate around the world. Freedom go up, freedom tech go up, freedom money go up. So
go up.
Exactly.
Yeah.
And so I got brought on to Cholla to run our innovation lab, is what we call it. And it's kind of evolved over time. The first thing was, hey, can we be a flexible load responding to real-time prices in ERCOT via a software system? Can we deploy hashrate in West Texas where there's a lot of wind and there's a lot of solar? And when the wind is blowing and the sun is shining, it's very cheap. But then when the wind's not blowing and the sun's not shining, because it's an energy-only market, the market price responds to that scarcity and price skyrockets, right? And so the first test was, hey, can we deploy this? Maybe we're on 90% of the time, 95% of the time, maybe as low as 70% of the time, but only on when it's profitable for us and off when we would be losing money. Because Bitcoin mining is one of the is the most unique commodity production businesses, because you're at the source, you're directly converting the energy into the end product being Bitcoin money, right? So you have a very clear, crystal clear way to calculate what your dollar per megawatt hour break even is. Everything else, there's the cost of, 95% of your cost of Bitcoin mining is energy. Sure, you have some people working on site, but it doesn't really come into the calculus, as opposed to a big steel mill or a big aluminum smelting facility. There's a lot more that goes into how much time does it take to heat back up the arc furnace. We're halfway through this smelt, how much would we lose? Bitcoin is very clear, right? And you're not penalized for turning off. The market, other Bitcoin miners absorb that shock and then keep hashing and transactions keep coming through. And so that's the unique part about it. And so that was the first thing we were trying to do. Like, can we flexibly curtail? Like, forget about this uptime metric. Doesn't matter. Like, if we can get, 2-cent power at 90% uptime, I would much prefer that than 100% uptime at 5 cents. And that was the thesis. And like, we wanted to prove that we could do that. That was a success. We partnered with Load. It was Linkcoin back in the day. And after we figured out, okay, we can successfully do this, like, how can we scale this, or like, what would be important things to provide and learn and take on risks ourselves to help accelerate what we want to see in the general mining ecosystem. And so that's when we took it. Go ahead.
Yeah. So I just want to go ahead. I have a question. Sorry. Go ahead.
Okay. So just really quickly, then that's when we decided, okay, let's partner with people that we respect in the industry, that we want to see win, that are building cool products that maybe haven't been commercialized yet, because nobody's willing to take on the risk at scale. Because we're so small, we're only 7 megawatts on a distribution system. We're willing to take on that low serial number risk because we're only buying one of the units. So we bought like the very first Giga Hydro box from Giga, deployed it. I think we were like the 3rd in the US, maybe the 3rd in Texas. We were pretty early to Hydro. We deployed it, I think 2.5 years ago now. So helped them develop that. And then we deployed some immersion, Hayden Immersion, U.S. company out of Oklahoma. We bought their very first Whatsminer specific immersion system. And then the final iteration of Cholla was, how can we capitalize on such low cost energy when everything is shifting so dynamically in the market? And so that's when we swapped back to air, and we come to the current day running like that ASIC retirement home, ASIC graveyard strategy. Because we have such cheap power, 50 to 80% of the time, depending on the weather in Texas, we can make S19 J Pros work and pay them off in 1-2 months. So yeah, that catches you up. So go ahead with your question.
Yeah, no, 100%. Sorry for interrupting you there earlier. So are you guys, couple of questions. Are you guys using mining also to take more oil out of the ground and to potentially help to have to flare less, basically? I know that's a strategy some miners run with oil producers. Do you do that in-house?
You would think so. And that's a common misconception at Cholla, like being an energy producer. But all of our gas is able to get into a pipeline. And
oh, nice.
In Texas, there's a constraint in the Permian Basin. The Waha, which is the hub in the Permian Basin, will very often go negative, right? You're paying somebody to get rid of your gas. It becomes a complete liability. We're outside of that constraint. So ours goes to market at a decent price. So it doesn't make as much sense for us to do so as other operators.
Yeah, I just had, to anybody that wants to learn more about that, I just had Chris on from 360 Energy, who was dialing in hard on that Waha hub pricing. Yeah, cool. Okay, so Brad, talk to me about the sort of preferred setup. I mean, you guys, first of all, it's a very amicable position and role to play in this mining system, where you're like, hey, hydro 2.5 years ago, cool, who knows? Let's just buy it and see what happens, fuck around and find out, which is something that not many people are willing to do, simply because it seems like you're treating the mining arm of your oil and gas exploration business as a bit of a R&D project for the wider mining industry, which is something that I feel like wouldn't exist in many other industries, where the mission of freedom go up, hash rate go up, Bitcoin go up is so important. It's very, very value driven. So that's very amicable. It's very awesome to see that. Now about the demand response, and I had Load on as well, and it's very cool what they do. Is that still the software you use? Talk to me about sort of the most perfect stack today, and what the response times are that you see with maybe different equipment and stuff like that. If you can call or remember that top of your head. Otherwise, just tell me what the sort of best setup is right now.
Sure, and we're unique where Texas is not the norm. The reason why so many miners have come to Texas is because it is an energy only market, and you can just be a real time price taker. So take with a grain of salt that I'm only operating in load zone west, which is like that part of Texas that has super low pricing and then high pricing when the wind's not blowing and the sun's not shining. But load's not the only software out there. There's Foreman, Luxor just released their Commander. There's a couple more that I'm forgetting. They all have different strengths, different weaknesses, but same flavor. Just a software that is taking an input right from the market, and then making a calculation based off of your real-time efficiency measured at the plug and measured versus your hash rate output to give you your dollar per megawatt hour break even. And then you just set different rails or curtailment strike prices based off of how conservative or how aggressive you want to be. Say if I'm within 10% of my break even, I want to wait 30 to 45 minutes and then turn off because it's marginal production at that point. If I hit my break even, I want to wait 15 minutes because maybe it goes back down. But if I go 30% above my break even, I want to instantly turn off because I know for a fact I'm losing money right at that point, and I can't sustain it going any higher. Because if it already has gone that high, there's nothing like stopping it from gapping up in the next 5-minute print and then like economics being ruined.
Buying Bitcoin miners should be simple, safe, and fast. Altair technology delivers exactly that. Based in the US and shipping directly from St. Louis, Altair eliminates all the shady messaging groups, customs and tariffs issues, and makes sure Bitcoin miners get to you on time. Altair stocks leading commercial ASIC miners, efficient home units, and all the critical parts you need, backed by real inventory, real support, and a team of people that you can rely on and actually mines Bitcoin. Thank you so much, Altair Technology, for supporting the show. And without further ado, let's get back to it.
When it comes to responsiveness to that, as much as I love Whatsminers, what really hurts them in this situation is that it just takes a long time for them to spool up. Like for somebody who's turning off so much, it makes it difficult. Love my Whatsminers. Maybe more so on like a consistent just hashing. You're going to put them out somewhere that's hot, that's dusty, and you're going to run them 24/7. Great thing to run. But when you're playing this flexible load and like a grid resource and like participating in different ERCOT programs, the responsiveness to it and the lack of custom firmware is prohibitive for Whatsminers. I know Luxor, I haven't actually tried it yet. I know Luxor finally shipped a Whatsminer firmware product. We've been saying when Whatsminer since, I don't know, 2019, 2020, forever. And it's finally there. But that was something that never really made sense to me. Like, love the team, but they were leaving a lot of optionality on the table by not just being like, hey, somebody help us co-develop a firmware to. The problem was their firmware was so good already, better than Bitmain stock, that like they didn't need to.
It's for that primary use case.
Sure.
When the M50 comes out, it's built to run 24/7 to make money, right? But that's where I think you're absolutely right. They leave a lot on the table because they disallow their units from becoming part of more innovative niche. They didn't think about it use cases, right? I just put together a project on a South African farm here with M31Ss, 9 machines, pilot project on a hydro dam. And I can cut power in 0.36 seconds. I haven't tried this with Bitmain machines, and it's just via the API. So there is that use case already. And in my situation, and I love that you raised that point, in my situation, cutting off is the use case. The farm needs power, cut the miners down as fast as you can. If they need some time to spool up, whatever, you don't leave much money on the table. But the primary use case is, hey, I don't want them to notice that now instead of producing heat, they're producing heat and hashes, right? But for the more sites where the margins are slimmer and you run a decent size operation, you don't want to leave that money on the table of how long does it take them to spool up. And then I guess, if the reliability is a problem, once your miners are $30, it's not really an issue, right? You're not going to fix them. You're just going to replace them and scrap them and make probably 60% of the purchase price already just by scrapping them. Yeah. So let's talk about that for a bit, Brad, before I ask you too many questions and we don't actually get to the reason why we are here today. Let me find this quickly. So I'm just going to share my screen to anybody listening. Now's a good time to switch to video. You guys put out this tweet, another batch of $30 S19 J Pro secured to run the ASIC retirement home strategy. First hookup was from Mega Miner Alex and Nick Frost, shout out there. And second from our boys down the road doing a refresh. First question, what miners are these guys replacing now?
These are just replacing other S19 J Pros, or maybe we have some 95Ts, we have some 98s, 100s, 102s, 104 J Pros. So it's really just we had some extra capacity. I was waiting for a good deal, and then this one, literally 15 minutes down the road, $30 a pop, no shipping costs because we just picked them up ourselves. It was too good to be
Fantastic.
true. Yeah.
Yeah, I mean, there's so many reasons why this is interesting and why I wanted to talk to you, right? Because it exemplifies a lot of the things that I often talk about. The bottom price is scrap value, right? If you have S19 XPs, 141 terahash, or these ones, they're worth the same at scrap. So it's a really interesting market where the bottom floor is not set anymore by the efficiency or whatever. It's all the same metal. It's just different chips, right? And then I wonder, you have this whole AI pivot going on, what we talked about briefly in the pre-talk. How many deals like this, and maybe slightly worse, are there? How many thousands of ASICs do you see? And maybe explain to my viewers a bit why we see these miners on pallets down the road, $30. I mean, I sold these models. I had two of those in 2021, and I think I sold them for $8,000 a pop.
Oh yeah.
Before they were even deployed, just because the hosting location changed from Canada to Texas.
I mean, I think the Pico top was, somebody paid $15,000 for an S19 at the peak of the bull market. Not the most previous bull, but the one before. I've been in for 7-8 years. I get the years mixed up, but you know what I'm talking about. But yeah, it's the trickle down effect, right? You've got massive Bitcoin mining facilities in Texas and in the U.S. that came for the latent power capacity. It was a super investable market. Geopolitical risk pretty low. You had Riot with 700 megawatts in Rockdale, another 1,000 megawatts in Corsicana. You had Core Scientific all throughout Texas. You had Galaxy running a 200 plus megawatt immersion farm in West Texas. You had Cypher. You have CleanSpark. All of these large publicly traded miners had a glut of machines, and the newer machines too. And so as those are getting liquidated on the market, there's a massive supply and not that demand, mainly because all of the available power capacity in the States has mostly been gobbled up by Bitcoin miners or with people trying to deploy AI. So you've got this situation where oversupply of miners, undersupply of rack space, And so the people that already have the rack space and are already energized have this opportunity to procure low cost ASICs. Because like right now, our site, 7 megawatts, is not exactly marketable for an AI facility. But there's nothing saying that it won't be in the future as an edge inference center for the local community. If AI compute truly is infinite, right? Like at some point, our facility would be a target facility, and then the ASICs would go through the same thing. Nobody's probably going to buy our ASICs. They're probably going to the scrapyard down the road. But this is the end of life for these units, and it really just stems from Pubcos selling to mid-size doing a fleet refresh, selling to smaller folks. Smaller folks is where it really ends. Small folks with low cost of power, right? So that's the people deployed in West Texas on wind and solar, and then on flared gas.
There's so many strings to pull on here. I think a site like this, be it of any size and proportion to what you have, should be, any miner should have this. Any miner that buys M70s today needs to think about a site like this to give miners a new lease at life. And then recycle them and get more juice out of them, right? There's nothing worse than having to sell these for $30. Like you'd rather deploy them yourself and have the power, right? So one of the first things I want to pull on is how much more power is out there like this. Do you think we will see all these miners that the Pubcos bought over the last 5 years that made hash rate go up are going to be deployed again? Are they going to be scrapped more? So what's your gut feeling? Obviously, you don't have a perfect view of the market. Nobody does. But what does your professional gut feel tell you, your educated opinion?
The thing about these public Pubcos, even if you have ideological Bitcoiners sitting in the seats, it's hard to move 10,000, 100,000 units all at once. One batch of $30 S19s we peeled off 500 units. But I think a lot of the other ones went to the scrapyard, to be honest, because they were going to get $22 and they could get $22 right then, right now, and then redeploy that into building out AI infrastructure instead of somebody being like, I'll buy them and let me send them down to Colombia, let me send them down to Venezuela, let me send them across the world to low cost power sources. I think some of these units, like the ones that we procured, if we can get them somewhere towards the edges, we will. But I do think a lot of them are they're going to be lost to the scrapyard. And I think
so that hash rate is gone forever, right? Just to pull further, I completely agree with you, but that means that hash rate is gone now. And these companies that are selling them, it's not like they're buying new machines to replace them with. No, they're selling their capacity and rebuilding their infrastructure, which then also means, in my opinion, that those megawatts are also gone for Bitcoin mining, because nobody's gonna plug in hydro or Bitcoin miners in $10 million per megawatt infrastructure. It just doesn't make sense. So where does Bitcoin mining go from here? America is 40% of the hash rate market. We've seen a structural decline. ASICs are gone, megawatts are gone. Are they just gonna go? I'm generally interested because I can't figure out where hash rate is going. We've been so used to hash rate going up, but I have my doubts whether it's gonna continue.
I think
obviously,
we're definitely into a brave new world, right? Who knows? I think overall it's good for Bitcoin mining, right? The era of the 500 plus megawatt mega mine probably would have been doomed from the start, and luckily enough, AI comes in to save the day of these big Pubcos, and it's good for Bitcoin on a decentralized basis, right? If you're really trying to get hash rate into the hands of people, and you want to decentralize the network, it is a net positive. It is just a little unnerving to see so much of a large change. the other thing is like I'm looking at it from a very U.S. centric lens, where U.S. is like the number one data center market. It's a super investable asset. Geopolitically, just like military industrial complex, like we're a pretty safe, protected place to deploy capital, right? And so I was actually talking to somebody that previously at one of the hyperscalers, and he was running his own venture capital fund, and he's like, where do you see Bitcoin mining going in the future? And I'm like, well, I would nowadays I would use Bitcoin mining as like tip of the spear to go secure megawatts and energy assets in B tier, C tier jurisdictions, low capex comparative to AI. But if you can then secure hundreds of megawatts of capacity and de-risk that to enough of your palatable to your risk-adjusted return, you could then theoretically do the same thing. Instead of the ASIC retirement home, you could have your GPU retirement home, send your H100s over to X, Y, and Z country, and deploy more AI compute.
I mean, how quick, like that, let's say, again, super interesting fact. If you, I'm glad you mentioned it. Like if you have an interconnect or you have a chance to secure a site and the energy operator says, yeah, but you need to draw X amount of power in 3 months, nothing but $30 ASICs that you can throw at the problem, and we all know they have the money for it. So yeah, sure, cool, let's do it. And that's what people understand. Like there's no other energy demand out there. And everybody talks about energy supply and generation all the time, but nobody talks about the demand side of things, right? There's nothing as energy dense, location, time agnostic, scalable, reactive as Bitcoin mining. Like that load profile has not existed before Bitcoin mining. And so it solves very new problems. And people who understand that will be, I think, highly demanded in this world where energy consumption and energy generation are just taking front and center stage globally, right? And then you said, and I'd be curious to see whether you agree or not. I live in South Africa. I'm German. I speak English. I'm sort of, I'm Caucasian, whatever. Like my view is also Western and US focused, and mainly my revenue comes from the US also, as I'm sort of interacting with this mining industry. Top 3 countries is US, Russia, and China for mining. Russia and China have zero view into what's going on there. I have no idea what's going on there with the AI side, if it's the exact same dynamics, which would make sense because the kilowatt hour in the US is a kilowatt hour in Russia, right? But I have no idea. I don't know.
I think the only difference would be sanctions from NVIDIA, because NVIDIA being the biggest supplier of chips, and then the inability for them to sell into the Chinese market. But give the Chinese enough time to build something, and they will build something, right? Like maybe they don't have the best chips, but they've got a ton more energy capacity. They can overbuild solar, they can overbuild batteries, deploy, DC native AI compute, and then just brute force their way into it. They'd be running the ASIC retirement home, right? You're just using old models, not top of the line, but you just have so much of it, you can produce a ton of flops and a ton of tokens.
BitX, solomining.de, got it. Premium, made in Germany. You want to go fancy? Go for NerdX or NerdQX++ for a lot of power. Worldwide shipping. Check out solomining.de today. Brad, is there anything else you want to cover before we hop into the rapid fire section of today's interview?
No, I think it's just like, it's really fun to be from the energy industry and seeing this revitalization. Bitcoin was the start, right? But it feels like the tip of the iceberg with all this AI compute, SpaceX, megapacks. Like we're in an energy industrialization renaissance. To be able to build things, bring it into reality, it's a fun and exciting place to be. So I'm just stoked to be involved.
You remind me of one more important question or section I wanted to ask you about. It's just oil exploration. Aside from Bitcoin mining now, like, where's oil right now? $100 a barrel or something? Like, what is the business of Cholla right now, and how is it impacted? Are you like drilling as much as you can? Can you offload all the gas still? Do you have constraints? Like, talk to me a bit about that. It's very interesting to me.
Yeah, I kind of didn't cover all three of the things that Cholla does, but on the oil and gas side of things, we still are strategically evaluating different fields that we're working in because we are an exploration production company. Every well that we drill carries a risk, right? There's nothing guaranteed. You're taking
Sure.
on $10 million bets that a well will be productive, and so we have to weigh that against our opportunities. And I didn't touch on this when I was talking about Cholla. I got distracted and sidetracked. We also have like a powered land AI development business arm. So we've taken our knowledge and know-how of operating, Bitcoin mining compute, applying for interconnects, going through the process with ERCOT and Encore, along with our ability to secure land, secure contracts, secure options, secure minerals from all of our oil and gas experience, combining those together to basically to market some of the land that we had bought previously for Bitcoin mining. We have like 15,000 acres in West Texas for Bitcoin mining. But then with the AI compute demand going absolutely bonkers, we've pivoted that into like a powered land developer. So that's our bread and butter. And so when evaluating oil and gas deals, we have to evaluate it against our opportunity that we see in the AI powered land space. And so it's a constantly moving equation. But as an oil and gas producer, we like $100 barrel in oil.
Yeah. No, of course you would. Yeah, it's gonna go higher, I think. So two follow-up questions there. How does like gas side exploration change, and what are sort of the key metrics, and how do they change with $100 a barrel oil? Do you guys think it's going to stay there? Like, what is sort of market expectation around energy scarcity and the conflict and stuff like that? So that's part of the question. And then just a note, I always read about the guys, the public miners pivoting to AI, but you just highlighted a very important point. It's not just them. It's anybody that owns land. It's people who own infrastructure, right? Now you've got, and I talked to Ryan earlier about this, you got all these suppliers of ASICs also wanting to plug in their units because nobody's buying them. So the only other use case is plugging them in, but there's nowhere to put them, right? So miners are it's just such a crazy market. I feel like that opens so many opportunities for people who want to get into mining, anyway, just an interesting note there. But talk to me about market expectation, oil price, and how that changes sort of gas exploration and site selection.
Yeah, I mean, the higher oil goes, the more economic oil is unlocked, right? Like a drill that you couldn't justify at $60 per barrel, you could maybe justify at $100 per barrel. And so like the idea of oil running out is not an ideal that like I or like the company entertains. Like economic oil may run out, which will then increase the price of oil, which will then incentivize R&D, which will then unlock more recoverable oil and gas reserves. We'll never run out of oil. Oil price would just modulate and incentivize different market outcomes. For us, and this isn't my area of expertise, so I'm like kind of just summarizing here.
Riffing.
Cool. I'm not Gideon, right? I'm not calling the shots, but on a short-term time basis, like you can't plan your business around geopolitical strife and like Strait of Hormuz like being shut down or opening. I mean, we saw it like close back down today, and oil gapped up 10%, right? The politicians of this day and age are playing some really crazy games, and so you kind of don't want to be basing your investment decisions off of like the whims of one person or another. But I think we do think oil will go up on the short term, but on the long term, it's just going to be hard to compete against a commoditized electronic product like solar and batteries that will proliferate around the world and take away some of the oil and gas needs and market share. It's not. I mean, okay. We're always going to need oil and gas. We're not making jet fuel out of solar, at least not anytime soon. But
also not going to make aeroplanes with solar wings.
Definitely.
Yeah, no, but maybe that would have been the better question to ask is how, because you're right, obviously, like the oil price is going nuts around the world, and the only thing that stays stable is the price at the pump, right? Steadily high. But then, like, how do you plan around that? Like, how do you just put everything on hold and you're like, yo, we're gonna wait until this nonsense has passed and we have sort of more stability? But then if you look back over the last 2 years, dude, there's been no stability. Instability seems to be like the new normal. And how I imagine, and that's not really a question there, but I imagine it makes something as long term as drilling an oil well very, very hard to do, because you're essentially gambling, because you have no, it's like Bitcoin mining, right? You can't really influence the revenue side of things. All you can influence is the cost side of things.
Sure. I think the most interesting part about the difference of oil and gas exploration and Bitcoin mining is that in Bitcoin mining, you're competing for a fixed amount of a resource, right? So you know that if everybody else in the network turned off today and you were the only Bitcoin miner in existence, you'd only produce another, whatever it is, million Bitcoin. The thing about oil and gas exploration is there's still massive reserves out there, so you can get outsized returns. Yes, you have you build a Bitcoin mine, and if it doesn't burn down, you will make money, right? You drill an oil and gas well, you don't hit oil, you make $0 and you lose it all, but you have the potential to hit it big and like outstrip Bitcoin mining rewards. And so it's a more risk on asset than Bitcoin itself.
According to all people who view Bitcoin as the base rate instead of the 10-year yield.
Sure,
right?
Sure.
Yeah, no, you're absolutely right. But what you just described is basically the reason why Bitcoin is better money than gold, right? Because there's a finite resource, and money, in our opinion, needs to be finite. Brad, I could keep going for ages. This is really fun. I know I have to have you guys back to talk about this. I want to learn more about stuff, energy, Bitcoin mining, cool. Like you talk about it, there's always new aspects. But I want to kind of also branch out a bit more, I think, into sort of, what's oil exploration like? Because I have no idea. How do those markets work in detail? And how are they influenced and stuff like that? So it was really fun talking to you. Let's do a quick rapid fire to close out. Cool?
Sure, let's do it.
All right. So best unit to buy today for demand response, best Bitcoin miner, best ASIC. What do you think?
For reactivity to the market, or like to power prices, it's going to be probably Aradyne, just because of their integrated like energy management, which I guess they're called Valara now. This is a nuanced response. Like, I'm saying Aradyne because, and you kind of talked about this earlier, and I'm riffing, and this doesn't feel like rapid fire, but you talked about this. You talked about this earlier. A lot of these ASIC manufacturers, server manufacturers, have a glut of chips, right? And so a glut of machines. They don't have Pubcos buying these machines anymore, and so they're very willing and eager to deploy them. And so you can get really nicely priced hydros. So if you're on like a fixed price power contract, like definitely hydro's the way to go, because that's where Whatsminer's going. That's where Ardine's going. That's where Bitdeer is going. A lot less maintenance, a lot simpler. You got 3-phase power, so no balancing of phases. They're really nice, and you can get a really nice price. Why I say Ardine or Velara is because they've got that tuning down pretty well, of like modulating. Say you get called to reduce your power consumption by 20%. Ardine, you can actually just have it reduce power by 20%. Whatsminer, as far as I know, you still can't do that. Maybe Luxor's working on that. And if you do reduce it, it's going to go all the way down and then come back up. And say you're going from high power mode, you go all the way down to 0, and then you come back up to normal power mode. And then even though I'm a big S19 J Pro fan, I'd never buy a new Bitmain unit. So, and I haven't tested Bitdeer yet.
I'll just leave that there.
Yes.
Yeah. No, that's all good.
So that's my
okay, cool. Do you think you will? Do you think you'll have to upgrade your retirement home to hydro in the next 5 years?
I think in the next 5 years we will be in the place where it's the J Pros. The J Pros that I'm getting now are going to be the hydros that are being refreshed. But there are still people deploying air, so I think air and hydro both will be an okay solution.
Okay, here's another half-hour interview. Efficiency jumps, Brad. The reason why you see these $30 units is because the efficiency jumps between what they can do and what you have today are massive. You don't have those anymore. So do you really think you're gonna have all that scrap available when the efficiency is maybe, I don't know, what's peak efficiency going to be? We're already at 2 nanometers, right? 0 is the floor, and Oridines are about 17 joules per T away from 0.
Yeah, I think we'll see. What is it, Moore's law? We'll see when it breaks. I don't think it has broken yet, and I think that all the investment into AI GPUs and those chips will probably have secondary knock-on effects to Bitcoin mining ASICs too.
Yeah.
And I'm just spitballing here.
Yeah. Just two dudes guessing.
Yeah.
I'll call this show two. Maybe. Who knows? All right, cool. I'm all out of questions, Brad. Do you have anything else to say? Anything you want to leave people with? Maybe your Twitter handle. Where can people find you?
Sure, man. Well, thanks for this. It was fun. Good conversation. On Twitter, I messed up my handle, changed it too many times, so now it's _ Brad Cuddy _ not that hard to find. I'm on LinkedIn too with a cowboy hat, laser eyes, and a pirate flag in my name. So try not to take it too seriously.
Yeah. All right, dude. It was very fun. Thank you so much for your time and all the best.
Thanks, Justin.
Cheers, man.
Appreciate you.
Bye.